Hello, everybody, and thank you for joining us for today's episode. Really glad you could make it and watch. I'm joined by my co-host, Brian Gorman, and today we have a really, I usually say special or something like that, but we have a really cool guest. Yankun from Goldstein and McClintock, a law firm out of Chicago. And she has been in the game for quite some time. We did confirm previously that she has Bitcoin, so she's already done that. But she's really she has some stories and tales of various different sides of crypto, whether it's blockchain, ICOs, funds that she's practicing along the way. And so Yankun, thank you so much for joining us and taking the time out. Really appreciate it.
Of course. Thank you, Alex and Ryan, for having me here.
Absolutely. And, one of the first things we do every time with a guest is we always want to know, and so does everybody else, how did the person on the screen go from being a normal person leading a normal life to going down a crypto rabbit hole and somehow that paying the bills in one form or another?
Of course. Well, I appreciate again you guys for having me and giving me a chance to talk about two of my favorite topics, crypto and law. I actually started my legal career at the Chicago Mercantile Exchange, or CME Group, in the derivatives and futures market. As you guys probably know, they have their own Bitcoin futures now, but not at the time when I was still working with them. I'm a corporate and financial regulations attorney, so wasn't always doing crypto work, and that's still just a part of my practice. Besides working in-house at CME Group, I've also worked in-house at an online lending company and have always loved working with startup companies and working with the business side of law and really seeing that impact. Made a switch into private practice, so I got a chance, luckily, to work with more different companies and businesses. And as an attorney, we don't usually get to see sort of the day-to-day impacts that we have in our clients. So I've been fortunate enough to work with a lot of different companies now, day-to-day, seeing them grow from startup to growth companies, as well as larger institutional clients. So to your question on how I got into Bitcoin, actually, the first time I heard of Bitcoin was actually watching this show called The Blacklist. Not sure if you guys ever.
Yeah.
It was back in 2013, I think it was the first season. I Googled this earlier today.
Is that show that old?
Wow. The show is that old, yeah. And I love James Spader from Boston Legal.
100%.
So absolutely had to see him in The Blacklist. And so I'm glad you guys have enjoyed the show as well. And I remember them talking about this was a way to hide assets. This was something that criminals had used in a way to hide money and all of that. So no idea what it was back in 2013. But when I switched to the private practice side was during the time of the ICO boom. So being a tech attorney and a corporate attorney, a lot of startups and companies started coming to me and asking me, how do we launch an ICO? How do we get into this? And that's when I bought my first Bitcoin myself, because I knew that if I were to speak intelligently about this to anyone, but also to understand my client's business, I needed to be able to actually see how wallets work. How does Coinbase work? How do you actually get money transferred on there? And how do you actually trade on exchanges? So part of it was out of fascination, and part of it was just out of being able to be a better attorney and partner to my clients. And so
what was the Bitcoin price when you first bought it? Just out of curiosity.
Oh, geez. That's personal.
I think it was, no, that's okay. I think it was 5,000 or 6,000 at that time.
Okay.
I also bought, I think Litecoin was pretty cheap back then. So I bought some Litecoin and Ethereum as well.
Okay.
When did you guys buy your first Bitcoin or altcoin?
17, bought it at about 4,000, and then wrote it up and then sold it once the right before the bubble burst. I got lucky.
Yeah, mine was, I was actually in crypto before I purchased. So I was actually teaching hedge funds how to trade crypto and set up crypto funds before I bought my first one, which would have been Bitcoin, and it was embarrassingly all the way to crypto winter 2018. But I think the wait was worth it because I got in at $3,900.
Ooh.
So.
There you go. There you go.
And do you still own the crypto that you originally bought, or any of it?
I knew you were gonna ask. I do. I do.
Okay.
I think I was just as excited as everyone else waiting for the halving, and it was a little disappointing, but you know, I still hold. I'm a long-term holder. Still play around with all the different exchanges, partially because I have crypto client exchanges as clients, but you know, the technology evolves. I think again, part of it for me, besides my own personal fascination and as a new asset class, is understanding how these new exchanges and new tools work, and seeing all the different altcoins pop up every single day is also, you know, something really interesting and pay attention to.
Did someone teach you how to buy it, or did you figure it out on your own, like online, going to like Coinbase.com and following directions?
Yep, I just went to Coinbase.com and followed the instructions. So,
Same.
yeah.
Mm-hmm. Yeah, Alex, you? Coinbase or somewhere else?
No, I actually, great question. I bought it privately. So the first time I did it, we dealt with all the exchanges, and I didn't want to open up an account with any of the exchanges that we dealt with as an institutional counterparty. And so I did an atomic swap with somebody, and I paid them, and they gave me the wallet with the keys, and I transferred it into my own ledger. So
nice.
You're
So
smart. I had the unfortunate, I lost my Coinbase password one time and went through that whole painful process of recovering it. So hats off to them for having great, you know, security, verification, all of that. But that was a pain. That was a pain.
I thankfully haven't had to go through that. I dread that happening though, because I tend to forget passwords and lose them because I make them these long, complex strings of characters. And if I lose my Coinbase password, I am up a creek. So it's been a bit of time since you first got into the crypto, digital asset, blockchain space.
Yep.
You know, regulation has evolved quite a bit since then. How are companies navigating some of these changes in that time frame?
Yeah, I think, you know, one thing that's really positive about the industry is that since the big ICO craze, but even since the inception of Bitcoin 2008, you can really see sort of the regulations mirroring the different sort of activities happening in the industry, whether it's through all the hacks, through all some of the bad actor and sort of the bad things that has happened since then. But as well as sort of, I see recently there's been sort of a really positive influx of regulators wanting to work with all the different companies and recognizing that we want to foster innovation here. You know, but one thing that when I talk about crypto regulation and sort of the history of all of it and what companies need to do now to navigate things forward, I always want to put this in perspective. So I think today CoinMarketCap said that there are about 5,599 different altcoins out there.
Yeah, when did that double? I felt like that doubled in
last
like
year.
Yeah.
It did. I saw that too. But since last year, it's doubled as well. So apparently there's a lot more new projects out there, which is exciting, I think. You know, it shows that innovation isn't dead necessarily due to the higher barriers of regulation here, and worldwide too. The market cap today was $266 billion, and you know, relative to Walmart, which is $334 billion, crypto overall is still a pretty small market. And I think that's almost important to keep in mind when you think of regulations. People wish that, you know, the SEC or the CFTC and FinCEN, all these regulators can spend more time or clarify some of their guidances. And it's really frustrating for a lot of my clients and for maybe you guys as well to deal with, but it's still sort of relatively a small market. And it's something to kind of keep in mind while balancing the interests that they have to deal with as well. So that's one thing I always like to point out.
Going to that frustration, do you think the U.S., to a degree, through a lack of regulatory clarity, is hindering our country's ability to innovate in this space?
Yeah, so I don't think we have, so I think, you know, a lot of our regulations has been, it was there. It was always there. There was always sort of securities laws guiding what coin offerings and ICOs should look like and the proper way to offer these. You know, I think where a lot of the difficulties come into play is depending on the nature of how you use crypto or tokens, different agencies have sort of different jurisdictions over different parts of this. You know, and in the US here in particular, there's sort of three categories of law we kind of have to look at. One being the state levels, all the different state laws, bit licenses in New York being one example, as well as all the federal laws, SEC, the Exchange Act, the CFTC, their Commodities Exchange Act, FinCEN's laws and other money transmitter license laws, as well as other privacy laws and considerations. And since these projects are all international in nature, companies also have to look at international laws, depending on which other jurisdiction they have users or they touch. So that's where a lot of the frustrations come into play, because you're asking some of these companies to be a jack of all trades and be able to navigate and understand all these different complex areas of the laws, not just from a state level, but all the way to international level. So from that perspective, it's definitely frustrating. Now, in the US in particular, I know, in the US in particular, back in 2013, FinCEN first called Bitcoin a currency. 2014, the IRS called it property. 2015, the CFTC called Bitcoin a commodity. 2016, I believe, was when the SEC classified all altcoins to be securities. And so with that sort of disconnect, companies at that point had no idea what to do, and instead they just called their different projects by different names. Let's call ourselves a utility token project. Let's do a coin offering. Maybe that would mean that we don't have to be subject to certain laws anymore. So
yeah, I mean, one of the biggest things, you know, actually, it's great to have you on because good legal minds in crypto are hard to come by, first of all. But two, we've also, we're still going through it. One of the largest monetary cases when it comes to token issuances, and that's the Telegram token. I mean, we're talking just under a couple $2 billion. Raised, and it's been a while. It's been 2 years, correct? Or so. And you know, when you talk, I think that's second to EOS ICO raise. But what's interesting is after all the legal finagling and the back and forth with the SEC, now they're coming. You know, it's almost like they're throwing up their hands and giving up now, offering investors their money back, but they're doing it in a very interesting and to some controversial way, which is, you know, I think you're getting like 80 cents or around there on the dollar back, unless you let us refund the money a year from now, and in turn we'll give you, let's say, 110% back. This is not a question. This is actually just a whole topic that I just want to rip open right now. What went wrong with this project offering in the beginning, and what could have been done as it went through legal? Has the best been done in how they've handled it with the SEC, or the SEC handled it with them? And then with, you know, the discounted refunding or the overage in refunding, depending on terms, I don't even know if that's legal in any sense. But I want you to start the beginning of what you know about it and what you can tell us.
So this has definitely been a case for all crypto attorneys, or basically the whole industry had their eyes on this case since end of last year to this year, when the decision came out finally in May and Telegram finally ended their project. And I think it was was pretty disheartening. Everyone was hoping that this is the opportunity for the first time that there might be some clarity through Judge Castillo or through a judge to be able to give us a better framework of how to follow and navigate and either avoid the same mistake as Telegram, if you want to call it a mistake, you know, I'm going to put asterisk there, and then, or to be able to get clarity finally on what a utility token is or security token is, and that framework that we've all been hoping to receive. And so, you know, so the SEC sued Telegram in late 2019, and this was around conducting an unlawful sale of securities. And I do not remember, and I don't know who did the initial paperwork for Telegram, but Telegram, it seemed like they had done maybe a lot of things right. And like everyone else, they did register themselves under Reg D while soliciting investors. So they had done all these things that I think a lot of other companies have done as well. So again, you know, it is interesting to see how this turned out. And one thing that this case really kind of shows is, so the SEC, you know, they asked for a preliminary injunction to stop Telegram from issuing their token, their Telegram Open Network blockchain, because their grams offering was illegal. And due to their purchase agreements with their initial investors, they were supposed to have this blockchain network, network open and ready by a certain time. I think the first deadline was October 2019, and then they had extended it back to April. And so by Judge Castillo of the Southern District of New York, by granting this preliminary injunction, he's effectively said, and he said in his opinion, that he found the SEC had shown a substantial likelihood of success in proving that Telegram sold grams to the initial purchasers with the purpose and intent that those grams then can be distributed in the secondary public market. And so he's found that there was no exemption available under the traditional Regulation D that a lot of people use while doing their token offering, because in this case, he found that the purchasers, what he had called statutory underwriters, they basically, in this case, they are called like a link of chain and securities transaction from the issuers to the public. So this has, I think, a big implication in the industry. A lot of people since 2017 and realized that they can't do a mass public offering, but there were exemptions such as Reg D or such as Reg 8.
Which, by the way, everybody did, except for one company. Only one company did a Reg A up until the end of last year.
Yeah, exactly. So everyone's used Reg D as the initial launching point for their token projects. And now with this, I think a lot of people have to go back, look through their offerings and look through, did they actually follow the right way? And if they believe they followed the right way, will the SEC see it the same way? You know,
do you think there's a lot of people who were behind those early offerings that haven't been notified or on the radar yet, that are just holding their breath in a windowless room right now? Is there a statute of limitations to this?
I don't know the statute of limitations, but I'm sure there is. But
I mean,
yeah,
they did go after quite a few projects though at one point, so it's not like they went after Telegram, no?
Yeah, so Telegram is specifically enforced by the SEC. Now, what's more interesting, or you know, what's very unique, and this is unique to the US, we're one of the only countries that has a lot of private litigation and class action. Class actions do not exist in most countries except for here. And that's what, Ryan, you were referring to recently. I think it was April of this year, there was a couple of class actions. So private litigation filed against some of these big companies like Binance and several others. Same thing, quoting that these individual investors, that they believe that the issuers and that these companies wrongfully engaged in these transactions, including how they solicited, offered, and sold their securities, and said that they did not register properly with the SEC or the required laws and regulation. So now
yeah, no, I mean, one of the things that when this happened, I think the general public was kind of excited because, to your point, it was going to test the SEC. It was going to test the law, and we finally had a very well banked defendant to do it, right? So everybody thought about they were going to be the Mark Cuban of crypto. They were going to be able to take it the whole way, and whatever the outcome was, everybody was going to live with it. But at least they had the resources to do it.
Yeah.
When they kind of threw their hands in the air and gave up, you know, there was a little disappointment. I mean, and I'm sure amongst the legal community as well, as they wanted to see what a well-financed case to the end would be, because that's more or less going to be a true decision. But you know, why did they give up, or why did they, you know, go down that path? Why didn't they see it through with $1.7 billion in the bank? Do you think?
Yeah.
Do you think this is not legal advice?
Of course. So part of it is just the timing and their obligations contractually to their investors. They were, you know, this is back to your sort of initial purchase agreement and the obligations they had set out that they needed to launch this by a certain time. These are contractual, right? These are contractual terms that they had agreed to that already got pushed back from last year to this year. And so, you know, I think they filed an interlocutory appeal with the Second Circuit. I'm actually not sure where that went. I think they might still be trying to see if they can do something here. Subsequent to the preliminary injunction getting rejected, Telegram had a follow-up asking for clarification on it, and actually made a new legal argument that the SEC here had sort of overreached their jurisdiction by subjecting their laws to investors who do not live in the US, and try to make this extraterritorial argument. Judge Castell said the argument was made too late. This is a whole different issue that someone else down the line might take over and try to make that case as well, since again, investors in all these projects are all very international in nature. But to your question, a lot of this comes down, I believe, from Telegram, that they wanted to be responsible to their investors. They couldn't deliver, and that's a problem. And that's sort of a problem that potentially that we'll see more private lawsuits and actions come out of, where a lot of these private investors into companies realize that the company's not going to hold their end of the bargain or the agreement that they had signed into.
So I think also with some of these other projects, I'm not sure with Telegram, but their original sin, even if they filed under an exemption, was selling to retail investors here in the States, right? Which a lot of us know you can't do, but some of these projects somehow did not know that. Is that Telegram encountered as well?
So Telegram claimed that they had sold to all accredited investors, and I think the SEC was starting to subpoena each individual investor to verify and see if this was actually true. Now, there was a lot of filings in between where a lot of investors didn't want their personal bank accounts and their finances and all of that to be disclosed. But I think that part, I'm not 100% sure, it didn't really go as far as it needed to, because this had gotten cut off and Telegram pulled back eventually. But
brings us to another question. I mean, is this signaling maybe a change in self-declaration of accredited investor?
Exactly, it is, and it's going to just be harder. You know, I think this is where companies really need to pay attention and really make sure that they're either comfortable with a self-declaration, or now they need to know that they might have to take it one step farther. They need to actually do proper due diligence, because we might see cases around this down in the future where the SEC is subpoenaing every investor. And if they find one to be unaccredited, you know, maybe that is the reason why they're going to say and call your offering to be illegal or not properly fall under the right exemption here. But this goes back to the question we talked about earlier, which is how burdensome is this for companies, and how as a company can you kind of navigate all of this along the way and still keep the lights on and still try to foster innovation and still do what you need to do. One thing I tell my clients is I know it's difficult to spend your first couple of dollars from fundraising to attorneys, and but we are meant to be your strategic partners, and sometimes you just need to talk to an attorney up front and make sure you find a good person to talk to, and they should be able to help you along the ways and navigate these waters. Not every company wants to do that. They like to dive in first and call up an attorney later on, but it's getting more and more difficult now. There's more and more scrutiny.
I think one thing that's been in the news recently, a few months ago, Commissioner Parris's safe harbor period. Is that something that sort of help these companies navigate those waters better without necessarily having to engage an attorney full time, or do you still need an attorney? And like, how does that overall that process?
Yeah. So I think you brought up something very positive that's come out of all these regulators in the past year.
Which is hard to do when you're talking about regulation. So thank you, Ryan, for doing that.
I know. So her knowing as crypto mom to the industry back in February of this year proposed, and now this is obviously not a law or regulation, it's something she's hoping to push through, but we're not sure at what stage or time. But again, it's a positive step. Wanted to help out a lot of these projects who wants to be a decentralized project to get there. One thing that we've learned last year is that for Ethereum, for example, or XRP, is some of these tokens are sufficiently decentralized enough that they are no longer considered to be a security. Now, the offering itself is a different story, and that's what Commissioner Pierce wanted to do, which is help companies be able to have sort of this safe period. Her proposal was for 3 years for companies to be able to work and build out their project and not have to worry about all the laws and pending regulations, and get to a point where their project is sufficiently decentralized so that they are no longer a security. But again, this is a really positive step.
And that was largely inspired by what the Singapore regulators have done with their their regulatory sandbox, from what I understand. Correct?
Yeah, and we also have individual states who have put forth similar sandboxes. But obviously, if something from the SEC or something from one of the federal regulators could come out, that's a great step for the industry. But states as well have tried to put in similar regulatory sandboxes to help companies move forward, but also to bring in new business into their state and be known as a state that does foster innovation.
Interesting. So, let's get a personal for a second. What are your feelings about digital assets, cryptos? Is it just a business for you, or is it something that you think is going to have a very large place in the world? And I'll frame that by saying, is it just a business to you, by saying that when people ask me about price predictions of Bitcoin, I really don't. I don't more or less care where Bitcoin's trading. It could be trading at 3,000, could be trading at 20,000. I'm a capital market person. I just want people to be trading it. So that wasn't meant as a negative way, but what's your personal outlook on it? What's your feeling?
Yeah, of course. I think, I get that question a lot. What is the purpose of Bitcoin? We can now use it at certain stores, but, with the price fluctuation, no one quite understands, is this a currency? What is it? For traders, like you said, it's a great asset. For others, they see it as a different opportunity. I think blockchain, the underlying technology, has a lot of great potential projects that can come out of this, separate from just cryptocurrency itself. But one thing that I see, especially with this insurgence of decentralized DeFi projects, is that people want a way to move money faster and freer across borders. And I think, for years, that's been something that I saw as an effect of this. I'm Chinese by heritage, and moving money out of China has always been one of those hot topics. How do we get investments into China and out of China? And with these rise of digital currencies, it's a way to maybe cut down transaction costs. It's a way to, again, move money much quicker than your traditional methods. So from that, I think the industry is still pretty young. There's been a lot of progress in the last decade, but now that, we've gotten over some of the initial bad actor times, such as all the ICO times with projects that didn't have a good, viable business plan, we are now at this phase where a lot of institutional players have come into play, and a lot more good, solid projects are out there trying to build something, whether it's a decentralized, a DeFi project, or it's a traditional blockchain-based SaaS platform. There's been a lot more positive innovation just through technology overall and the utilization of blockchain.
And I think you're right when it comes to cross-border monetary transactions. I mean, you look at over the course of, let's say, the past 12 to 18 months with what's happened in Venezuela, what's happened in Turkey. Those are people, we don't get to see that as people living in the United States as much, right? We're very privileged when it comes to monetary transactions. We walk into a Starbucks, the price is the same for the medium grande, as it was the day before, and we pay. To your point, I remember in 2017, 2018, a lot of calls from China investors basically looking to use crypto or crypto funds as almost a flight of capital, right? To exodus in money. And then along came Venezuela, and then soon afterwards Turkey with a depression in their monetary value system, and you see spikes of crypto purchases. I think that, that is probably one of the most impactful things, like use cases right now for it. And again, we're spoiled, so we don't realize that as much. I think we should all spend a month down there trying to live on crypto. But you're right. Now, when it comes to regulation and going back to what Ryan touched on before, there really is, there's almost an impediment. And there's a lot of other countries that, are well along crypto that look at us as an impediment. What's your forecast on when there's going to be a uniform approach to a regulatory regime, and not a month-over-month guesswork, so to speak?
Yeah. I think that's a question people have been asking, not just about crypto, but just about financial regulation overall, from the Dodd-Frank Act, which caused a lot of headaches for everyone as well. Now, crypto being another implication of it. I think, one thing that we really need to be mindful of is sort of why these regulations are here and what they're in place for. Back from 2013, when the government busted the first Silk Road and all the illegal activities utilizing crypto to all the exchanges that got hacked and all of the sort of Ponzi schemes that have happened since then, the US laws here, as big of impediment they might seem to some, is really meant to protect retail investors and the average person. And it also kind of puts the US as a gold standard when it comes to sort of having these rules and regulations in place to protect companies and protect investors. You knew if you're an investor coming to invest in the US, you have certain rules and guidelines here, and there's almost this sense of insurance, if you may call it, or that you have certain rights if something does go wrong. That doesn't happen with every country. And, that standard isn't there across the board. So it is difficult. We wish there's sort of the uniformity. And I think people are trying to, you know, I use China as another example. I've seen a lot and heard a lot of sort of positive movements from there, but their law is very different from ours. They're a complete black letter law country. And so if it's not written in the rules and regulations, there's no in spirit of the law like we sort of do have here. But there is a recognition that, you know, if you do business with here in the US with a US company or someone based here, you have a higher standard of quality in some sense than maybe if you were to do business in another country with less strict rules and regulations. So it's a different perspective. And I know, you know, it's difficult. We wish there is a uniform law across the board, but it's sort of, you know, almost a protection way of saying that if we do business in the US, you know, you'll have this kind of standard. And now for smaller companies who are looking to maybe just do a quick capital raise through the good old ICO days, you know, that's one thing that we try to hear the rules and securities laws are trying to prevent. They're trying to prevent having, again, all the Ponzi schemes and all the people that have lost money through some of these investments. That's what the rules here are to protect.
To that point, you know, Quadriga CX has been in the news quite a bit, and Canada's security laws aren't all that different from the US's, but like, is there any actual legal recourse that people
just Ryan, you got to ask the question you want to ask. He wants to know, is the guy really dead?
Well, yeah,
alive.
There's no way that any recourse the investors have, the people who use the exchange, is there any recourse they have to try and claw back some of their money, or are they just kind of out to pasture, so to speak?
I think they might be out of luck.
That's unfortunate.
Yeah, I don't know Canadian laws. I know they're very similar, but I think they just might be, you know.
If that happened in the US, would they be in a similar situation?
I mean, that goes back to sort of this increase of private actions we've seen, you know, but this also goes to why Telegram, though they're giving money back to investors, can only give, you know, less than 100%, you know, whatever the amount of cents to a dollar. A lot of these companies have spent the money already, you know, so if there's a way to, you know, in the US at least, there are ways to pierce the corporate veil to go after personal assets if you believe there actually was a breach of fiduciary duty by the CEO, the board, and other officers. So we have those protections. Now it's still a hard and potentially drawn out litigation, and we don't know how much is actually there at the end of the day. So there's legal recourse, and there's sort of the practical, what are you actually going to find at the end of all of this? You know, there's been a lot more great tools in the last, I guess, 5-6 years about finding crypto assets. You know, now that crypto has been so prevalent in the industry, it's funny, I have divorce attorneys who've asked me about crypto, because all of a sudden you have husband and wife get divorced, and people realize, wait, my husband had actually a flash drive of crypto. How do you discover this? If he had one flash drive, who's to say he doesn't have more? And now there's a lot more like forensic tools being created. Same thing, you know, when someone unfortunately passes away, how do you find all their assets in a hard wallet crypto? How do you find that? How do you, if you find one, how do you find other cold storage wallets, you know? So it's kind of impacted a lot of different areas, even for the law, than we have expected. So, but it's what keeps things really interesting.
Fair. Alex, do you think he's alive or dead?
Wow, I always want to go with the conspiracy, so I'm going to say he's alive on that sailboat he bought.
Yes.
Somewhere in the Caribbean.
Yankun, you think he's alive or dead? This isn't legal advice. Just
no, I know. I think he's dead, or he changed his face. Who knows? He might have just changed his face, blacklist style, gotten someone to redo all of his cosmetics or something. You know,
like that movie Face Off, where they just switch faces.
Yeah, exactly.
There you go.
I mean, this is This is so interesting. And I think crypto and blockchain have just had a rough go of it the last, let's call it 3-4 years, from heightened bubble speculation to a crypto winter to nothing at all happening last year whatsoever. The whole industry was basically sideways to now COVID lockdown. I mean, and I think crypto people are starting to take it personally too. Like, we're just getting beat down. Um, what are you seeing as far as an uptick in projects or requests that are walking through your door now? You know, if we say ICO was 2017, we'll say crypto funds was 2018, STOs were 2019. What's happening now?
Yeah, there I think I see a lot more activity in sort of the hedge fund space and the investment space. You know, I think PwC put out a great crypto hedge fund report where they said from 2018 to 2019, the asset under management here effectively doubled. And, you know, I think there's a lot, people are also starting to see this as maybe a more stable industry as well, where there's a lot more promising projects, so a lot more institutions and people want to put money into this, like another asset class. And so from that side, there seems to be a lot more institution money and institutional players coming in here. In terms of other non-crypto or non-investment type of projects, I think, you know, there's still a lot of good exchanges being built, people caring more about the security aspect. Now, cybersecurity has become such a prevalent thing. How do you prevent hacks? How do you prevent all these people from stealing your keys, phishing, and all of that? And how do you protect maybe users? And there's a lot more emphasis on building good security compliant exchanges as well as other sort of projects around this. So I see sort of an uptick on people who are trying to build more just better projects, but more compliant, but also more secure. We really care about cybersecurity in this day and age, especially with COVID and everything going online and so much, you know, outside crypto alone, but so many issues with people's identities and all these things being stolen. That's a big area for people to focus on. I think the industry has focused more on this.
I think, no, I agree. I think the picks and shovels maturity level is what's in demand now. It's almost the icing on the cake to kind of cap off this 10-year saga, this 10-year story of blockchain and crypto. Brian, what are your thoughts?
Yeah, I think, you know, building out those institutional level services is key to getting more sophisticated players in the space. And the more that you get into the space, the sooner some of that capital will start to inflow, and we'll see, you know, the space, the asset class itself grow, not just among Bitcoin and ETH and some of the bigger coins, but some of those altcoins where there really is a lot of opportunity and a lot of upside. I think we'll start to see a lot more action in those as well, because more sophisticated funds that have more diverse strategies and people who have different investment objectives. I think, you know, it's coming. People keep saying that the institutional capital is coming, but I think that PwC report earlier this year, the increasing prevalence of prime brokers looking to service these funds, I think, you know, it actually is starting to come. It's starting to flow in. A lot of the family offices I've talked to are increasingly interested in this space as well. Yeah. So it's just the sentiment is changing for sure, especially with all the, you know, the volatility in traditional markets as well. It's not like people are as afraid of volatility as they used to be, you know.
What do you guys think of using Bitcoin as an actual currency, you know, talking about COVID and sort of this weird situation where in this world pandemic where we're forced to have contactless payment, and we want to look to these different forms of digital assets or digital currencies instead as ways to pay. How do you guys feel about that? Where do you see this going?
I think right now, if you're in a place like Venezuela or Syria or someplace where there's a lot of inflation, I think it's a very attractive proposition. But for the average person, the everyday person, I mean, Zelle, Samsung Pay, Apple Pay, they work well enough where we don't necessarily need to look towards Bitcoin yet.
And it is a digital currency. I mean, it's a digitized dollar when you use those.
Yep.
But I mean, as people increasingly come into the crypto universe, China's digital yuan is going to, even if you get 1% of China, the amount of people that you get into the crypto ecosystem that get used to using that digital token and using wallets, I think it's going to make a massive difference. And over time, I think it'll be more attractive. But right now, I think it's not quite there. You know, Alex?
Yeah, no, same. I mean, if I was to use digital payment system in crypto, it would be with a stable coin, just for, you know, price reflection guarantee. But that would be the equivalent of sending, you know, one of you guys PayPal. You know, and I really wouldn't want to give up my Bitcoin. So I don't think that Bitcoin will be used or become any sort of payment methodology on a broad scale. So this is the part where I normally ask, or I try to ask people for a price prediction, right? It's so freaking cliche too. You know, what do you think Bitcoin price is going to be at the end of the year? And this, you know, that question this year is very loaded because you have elections, you have COVID, you have everything else. But I actually don't want to ask you that unless you want to throw out a number voluntarily. But I want to ask you, when you leave the office, which I presume, you know, your partner, big name white shoe law firm, big town of Chicago. So when you leave the office and it's dark out on most days, I'm sure, and you get to your couch at home with a glass of wine, what are you reading? Like, what are you reading in regards to lawsuits, whether class actions or you know, anything that has to do with enforcement? What is really like tantalizing you and you're like, I want to dig into the weeds on that?
So I actually read probably financial news more than, you know, litigation, enforcement actions, all of that. You know, being a corporate attorney and, you know, personally looking into this, I like to see where the general financial market and where the general market sentiment is, more than just, I guess, seeing all the bad enforcements or all the enforcements come down instead. I'm probably reading client emails as well, or all my clients should believe I'm reading their emails the second I get home with that glass of wine. But I generally read financial news, if not more than the law, or about the same. You know, I think for all of us attorneys, we generally have alerts set up. So every time the SEC comes out with a new action letter, or, you know, I have CoinDesk and Decrypt, I have those all pulled up sort of, and aggregated times. I'm in Telegram groups with folks who already send each other enough news. So sometimes I can just kind of quickly skim through and see what everyone's trying to talk about as a quick way to filter. But otherwise, you know, I have alerts on most of the agencies to see what they put out, because what they put out is going to be they'll be the first to put it out, but also you know, I want to go straight to the main source of it.
All right, very cool. Listen, I want to thank you for your time. We're going to offset this by charging everybody who watches it $1 billable hour. So don't think this was for naught. You know, and for everybody watching, you know, Yankun's information is all going to be in the description. Every which way you can contact her will be there. If you have questions, are you looking to engage an attorney in the space, please check her out. You know, these are the episodes which are fantastic because they're not what like Ryan and I's specialty is. And so we get to hear from really bright minds about really important subjects and not shoot the crap all the time. So thank you once again so very much. Really appreciate it.
Thank you very much for coming.
All right, guys. We'll see you next time. Thank you.
Bye, everyone.